Hello guys and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video we're going to be having a quick look at the crude oil markets following by the gold chart. Before I start today's video, I just want to quickly declare that myself and my private trading group over on the streaming service that I offer do both have a buy position in crude oil and a short position in gold. So I just wanted to make that very clear before starting today's video. My bias in crude oil is bullish and my bias in the gold market is bearish. Of course, I can't declare or state exactly where we entered both of our trades, take profits, stop losses, etc. You have to sign up at the streaming service for a very small fee of $19.99 to require that information and become part of our private Telegram signal group. But let's start off analysing the crude oil markets. Crude oil, I really like this setup at this moment in time. We're just continuing to march up the stairs. We're just building up some nice higher highs, lower lows, and I think that this will just be a nice, small, slow grind up towards the upside until we do hit that 50-day EMA. We have been capped here at a 0.5% fib level. If we can break above these highs here, these swing highs, that's when we go and test that 50-day EMA. If we can break above there, that sends us up towards the next fib level, up at 0.61, which is currently up at around $76 and so on, and then that's our route up towards $80 a barrel personally. Also, you could argue that we could be forming a nice little wedge here, nice little triangle wedge, and we're now currently testing the top side of this wedge. If we break out, fantastic, but we could see a nice little fall down towards $70. That could be again an area where you could put some nice cheeky bids down at $70 a barrel. But ultimately, medium to longer term, I don't really like to forecast it day to day. I like to forecast it week to week or month to month. Ultimately, I think that we do trade back up towards 80, 85. That could be in January, February next year. But I really am bullish for the crude oil prices. You're seeing spiking energy prices globally, and I do not see this stopping anytime soon. So I am a bull here for the crude oil markets. Also, another thing I wanted to highlight is that we're getting squeezed and squashed in here with just 50 and a 200-day EMA. And also, one more thing that I did want to highlight is that we are getting squashed in here with a 50 and a 200-day EMA. And ultimately, one day, we are going to either have to break towards the upside or the downside. Of course, anything could happen. We could see a further move towards the downside. But personally, my bias, I'm favouring a pop towards the upside here for the crude oil markets. Moving over to the gold markets. Gold currently trading up at $17.97. We formed that ugly looking candlestick, I should say, on I think it was last Friday, where we had that swing highs up towards 1814, and then going into the close we saw a pair of all those gains, and we actually finished the day in the red, and we formed that shooting star candlestick, which is typically a bearish sign, and that was followed by two red days. And right now we are up at those swing highs, but this is what we've seen in the past couple of sessions. We've gone and challenged that 50 and the 200-day EMA, which is those blue and red lines on your screens, and then going into the close of the trading session, which is still 5, 6, 7 hours away, we do see a return to those lower levels. So that's something that I'm looking out for here in the gold markets during today's trading session. But ultimately, I'm bearish. I have a take profit a lot lower than these current levels. I think that the Fed ultimately will kill the precious metal. It had its time to shine. We did hit a brand new all-time high up at 2067. That was, of course, last August. But if I was holding gold at this moment in time, I would see a massive red flag, and I would be asking myself some serious questions. I personally do not think we will have a better environment for gold that what we've seen in the past 2 years, especially 2020, and gold could only achieve 2067 with all the printing, with the cut of interest rates. That's pretty much every single central bank around the world cutting interest rates to 0%. We saw an incredible amount of printing, in fact, a record amount of printing, and financial assets being purchased by the Fed, and still gold could only achieve 2067. So I just do not see an environment where it can trade higher than 2067 in the years to come, and I think that this is a fantastic medium to longer term shorting opportunity. So I am bearish here in gold, but as I mentioned, if you would like to go and see my entry point and take profit price, then you can go and check it out on my more in-depth video that I have just posted over on our streaming service. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.